Richard Clarida is here, former vice chairman of the Federal Reserve and global economic advisor at PIMCO. Thanks, Rich, for coming in.
Yeah, glad to be here.
And I was going to start with a half-empty, half-full analysis. So if Jay Powell, on the one hand, says, man, we look at what's going on, and we're worried about inflation, and we're worried about the jobs market. This is a really complicated time for monetary policy. That's the half-empty. The half-full is, you know, inflation might be sort of grounded. 3% isn't great, but there's a lot of trends that are indicating that could be, you know, the high end of things. In the labor market, gosh, it looks like it might be slowing, but there's a lot of bright spots in the labor market too. We're in a really good place, and we're able to cut another quarter point. Which is it?
Well, I think it's actually more the latter than the former. Indeed, Joe, the Fed actually revised up its growth outlook and revised down its inflation outlook, and those are all positive. Indeed, some of my friends were saying people were worried about a hawkish meeting. It actually turned out to be pretty risk-on. I think the other element, of course, was restarting the Treasury reserve management purchases. And the chair also mentioned as well that but for the arithmetic of the tariffs, he's pretty confident that the trends in inflation are lower. So I think it's really more your second version than your first.
I mean, you could say, "Oh my God, it's stagflation." That's what you could say. We got both mandates, both risks are still present, and it's weird to have both of them present.
If growth increases while you're doing that, that's not stagflation.
No, I don't. I want to take the positive side of things. How come so many monetary purists are saying if the Fed raised its growth estimate, what is it doing cutting again?
Well, ultimately, what the Fed would like to do is have price stability, and that's not trying to kill growth. Indeed, during my time at the Fed, I said,
their whole job,
we're happy when people are getting hired and wages are going up. So really, it's supporting the strongest growth you can that's not inflationary. And indeed, you know, we have actually seen stronger productivity. You know, one way to think of sort of the GDP numbers is they're running above trend, but employment growth as measured is slowing, so the difference is stronger productivity growth even before potentially an AI story kicks in.
We had the Commerce Secretary on just now talking about like GDP numbers that we haven't seen in decades. Maybe not decades, but I don't know the last time we saw 5 or 6.
Been a while, maybe the 90s?
Maybe for a quarter,
yeah,
we might have seen it.
Yeah.
Why do people think that we're in an economy that's like a pipe dream? Is it?
No, I think the trends in productivity, which are key to prosperity, have really been evident in the data for a while. It's been a very turbulent 5 years with the pandemic and the inflation overshoot, so there's a lot for people to look back on. But the fundamentals, I think, as you mentioned, are quite favorable, and they're really being fueled by a CapEx boom that, if anything, is going to accelerate next year.
We had Steve Eisman here earlier this morning, and the thing he worries about is if the large language models are running out of room for greater iteration, for complete improvement. If that eventually leads to the slowdown in chip buying from some of the big mega caps that have been putting so much money into CapEx for this, if that were to happen, do you worry that would slow the entire economy? He was certainly worried about what that would mean for all of the stocks that have done so well.
Yeah.
I guess my bigger question is, what would that mean for productivity as this kind of spreads out and companies start using this AI to get more effective and more productive?
I think eventually, you know, like all technological innovations, the pace of CapEx will slow, probably not next year, and it will probably show up in some of those very expensive chips, as you mentioned. But as I mentioned, the productivity growth trends have really been evident in the data for a while, and I think that it's not just an AI story. I think AI is dominating what we're seeing in CapEx right now, but longer term, I think there are positive fundamentals.
I tie it back to what we heard from Ed Yardeni earlier this week. He's been overweight tech stocks for 15 years. He changed his mind this week and is no longer overweight that because he thinks every company is now a technology stock, and these productivity gains will bleed out into all of the stocks that have kind of been left behind.
Well, that's potentially true. Look, I will defer to Ed on his equity call. He's been doing it longer than I have. But, you know, if you just move away from the Mag 7, my understanding watching your show and others is that earnings growth was pretty good for the other 493 as well.